Today we're digging into something pretty interesting. A strategic shift with Korean credit card companies.
That's right.
It seems they're moving away from, well, the usual stuff and really focusing hard on premium cards.
Yeah, exactly. Our sources are pointing to a clear pivot. The traditional ways of making money, especially from merchant fees, just aren't what they used to be.
Okay, so let's get into that. What's the core problem they're facing? It's about those merchant fees, isn't it?
Precisely. For years, that small cut from every transaction, that was their bread and butter.
Right.
But starting back in the mid-2010s, the government stepped in and, well, they've cut these fees multiple times.
Ah, okay.
And this constant pressure, it's really squeezed their profit margins on just, normal everyday card use.
So if that main income source is shrinking, where do they turn? What's the new strategy?
Well, the new game plan seems pretty clear. It's all about premium cards.
Preview cards, okay.
The ones with the higher annual fees, more benefits, targeted more towards wealthier customers.
All right, those exclusive-looking cards. What makes that group, the affluent customers, so attractive to them, especially now?
There are a few really good reasons. First, these customers tend to be more financially stable, which means they usually pay their bills on time, and there's a lower risk of them, defaulting.
Okay, less risk.
And with the economy being a bit uncertain, that kind of predictability is, well, it's gold for the card issuers.
That makes sense.
Oh.
So is this shift just a theory, or are we actually seeing evidence of it happening?
Oh, there's solid evidence. The data we looked at shows a really significant increase in new premium cards being launched.
A significant increase.
Yeah, a surprisingly large chunk of all the new cards hitting the market in the last year or so fell into this premium category. It really signals where their focus is shifting.
Wow, okay. That definitely shows a clear direction. But it can't just be about the annual fees, surely. Is there more to it?
You're right. The fees are a big part, definitely. But it's also about attracting and, crucially, keeping those high-quality customers.
The ones less likely to default.
Exactly. They tend to be more profitable overall. And interestingly, the company's own data, their internal numbers, actually show annual fee revenues going up noticeably right after those merchant fees got cut.
Ah, so a direct reaction.
It looks very much like a direct response, yes.
So can you give us a picture of what this looks like on the ground? Any, specific examples of these new high-end cards?
Absolutely. We've seen some big names launching new premium products just this year.
Like what?
Think co-branded cards with big international hotel chains offering really attractive travel perks.
Okay, travel benefits.
And also specialized cards designed specifically for small business owners with rewards tailored to their needs. So it's not just a minor adjustment. It feels like a real strategic redirection.
We also heard from someone inside the industry, didn't we? What was their perspective on this?
Yes, we did. A representative basically stressed that finding new income sources is, well, essential now that the core business profits are shrinking.
Right. Makes sense.
And they definitely see premium cards with those higher fees and more reliable customer base as a really key opportunity for growth and stability going forward.
Okay, so pulling it all together, Korean credit card companies are essentially making a strategic bet. They're moving towards premium to offset those falling merchant fees and lock in a customer base that's, well, more stable and profitable.
That sums it up nicely. They're adapting, the regulatory environment changed, so they're shifting their focus to a different market segment and a different revenue model.
And that leads us to our final thought for you, the listener. How might this focus on premium change the kinds of financial products you see offered in the future?
Yeah, could it lead to more separation in the market, different deals for different folks?
And what does it mean for things like customer loyalty, especially when those high-end perks become the main attraction? Definitely something to think about. Thanks for joining us on The Deep Dive.